Technical Trading Tuesday. I am Matt, and I teach new traders how to become more profitable and consistent with trading. You're in the right spot if you're trying to learn how to trade or be more consistent with your trade. So, in today's episode of Technical Trading Tuesdays, we're going to go over the last 2 days of trading, Monday and today trading. So a quick look at the chart for the week. We can see where we closed at on Friday. Sure, some of these markets up. All right, so the market gapped up this week. Looking at the weekly chart, it's clear as day. You can see it. This is where we closed. We closed down here on Friday and we opened up here when the market opened on Sunday. And as well, last week, the week before that, we also had a gap that we did close in. So these two gaps are kind of layered on top of each other. Last week, the week before a gap is layered on top of this week's gap. So if we take a look at the 5-minute chart, yesterday when the market opened, it was bearish for the majority of the day. So this is where Monday opened at 9:30. The market opened. So you can see that's the open right there. I like to just label that. And since we gapped higher when we opened on Monday, the market is gonna look to close in the gap. So the market started to, right away when the market opened at 9:30, you see that it started to push lower and lower. A small pullback right here just before 10:30, and then the market just continued pushing lower. And then within the day, it just consolidated a bit. I was able to get a short, long trade in, taking out this high. We're at this week's new week. This NW means new week. So the new week gap for this week, this current week that we're in, where the market actually opened, I actually placed a trade right there, buy trade, and it's just a very short trade because I started to see the market consolidating. So I got out with a small profit. And then for the day, the market just closed right beneath or the market closed right near that gap for the day. And then the following day, today, as you can see, the market gravitated towards this new week, previous week's new week gap that I said is layered with this week's gap. So that is like a big magnet for price to get drawn to. As you can see, overnight we made a London high right here, and then the market pulled back, ran that high a bit, just by a tick, and then continued to move lower for the morning session. Now, take a really good look at these levels. All right, so up here we have this week's opening price, and this is the price where it closed on Friday. This is where it closed on Friday, where my cursor is right now. So today's movement, the market dropped overnight before the market even opened at 9:30. Pre-market, it continued pushing lower, 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 lower. All right, so I was looking for a trade around this area. We did fall into a daily level right here, which was a daily gap that's been filled, but the level is still there on my chart. So we closed into this gap, this week's gap. We closed it. So once we came down to this week's gap, closing it in, right away, you see the market starting to reverse. Now, the reason why I was looking for a buy right here, it is a key level. This is my key. This is a key level that I love to trade off of. And then right here, you can see that we have relative equal highs. When I say that, I mean it's pretty clean highs. Like the market's gonna want to run these equal highs out. So that was another reason for me to buy. So we have that key level. We have relative equal highs right here. So this gap right here, actually, I was looking for to say that there's specific times where you want to look for trades like macro times, like 950 and between 950 and 1010 would be a perfect example of a macro trade where the market is expected to move at that certain time. So that's exactly where I placed that trade. But just say I didn't place that trade, my thought process behind the trade this morning would have been if we weren't here around the macro, like say we failed to even come down here, I was looking for the market to possibly even push lower than this level if we were at the macro time and we were past like say past 1010, so around like 1030 if the market came back up, because this is where this level, this line right here is where the market closed last night. So yesterday, this is where the market closed. The previous day on Monday, this is where it closed on Monday, and this is where it opened this morning. So I expecting, obviously, once again, the market to close, but if it didn't close the full 100%, I was looking for the market to possibly gravitate towards this gap right here and then possibly roll over, going much lower because there is a weekly gap on the chart that has not been fulfilled. So this gap could have possibly have been a target if we've seen lower prices, which is still a area of interest for me, but I just don't see this setup happen just yet. So going back to the 5-minute chart. All right, so today we have the open at 9:30. 9:30, it pushed down. So we're at a key level of the new week gap. They closed yesterday's gap, which was the gap on the weekend. So it closed the weekend gap. This is where it closed at on Friday. This is where it closed out on Monday. Just don't get it confused. This is Monday's close and this is Friday's close. So we closed in on Friday's close, and today we opened right here and we have Monday's close right here. So entering at a key level, which is the new week gap or the close, is perfectly fine, but I like to trade at macro times. Like I said, 950 to 1010 would be a macro time. Take my vertical line. So right there, as the market is pulling back, we're still in the previous week's new week gap. And look how the bodies of the candle are just respecting this level right here. Also, just look at how it's respecting this week's new week gap. Like perfectly, perfect. So right here, 950 entry. 950 entry. So we're at a new week level. We also have these highs that I was talking about, these relative equal highs right here, where it's just clean. It seems like an area of resistance, so people might place their stops right there. And we also have the gap from last night till 9:30 opening. So this is the overnight gap. So the market is going to want to run these highs and fill in this gap. So that is a perfect trade setup, as well as we also had this low that it ran out. Buy stops were placed right here as well, so it ran that liquidity out as well. And also, if you look over here, I still have this horizontal line right here where the market would be drawn to, because we have equal highs as well right here and over here as well. So you can see that, like, these equal highs, once they ran out, you could see like the liquidity was taken out of the market, because once the liquidity was taken out right here, we have this big down candle right after it hits this level, but the markets still continue higher. Potential targets for me. Let me just clean this chart up now because it's a bit messy, but that's kept it on just for this lesson. So we could take off these opens, levels, and closes. And what's that like? Fibonacci. Delete that. Just to make the chart a little bit more clear. So yeah, you can see that the market gravitated back towards where it opened on, I believe this is yesterday, could be Friday. Yeah, this was Monday's open price right here. So the market even gravitated back towards Monday's opening price, which is something that I've been actually studying. I've been seeing that Monday's open price seems to have like a gravitational pull on the market, where the market will come back to it multiple times throughout the week or twice throughout the week. So that's something I am keeping my eye on. So yeah, the market closed right here for today. The market just opened back up, but this is just going to be all overnight until we open at 9:30. Who knows where we're going to open at, but the way it's pushing higher, we might just have a gap up higher where the market might want to just say tomorrow at 9:30 it opens up somewhere around here. This is all hypothetically speaking. It opens up somewhere around here. It's going to want to close in the gap once again. And the thing about these gaps, they don't always completely close on the same day. Sometimes they could do like a quarter of the gap or half of the gap fulfilled. Like say it opens up right here, it could close in like a quarter of the gap or half the gap. It doesn't have to completely fulfill the gap. So I'll leave those levels on for like a week or so, about a week, few days within the week, and I go from there. Potential levels If you take the Fibonacci from this low to this high to get the potential targets for this week, which I think we just might have hit the first target actually. Yep. So as you can see, as soon as the market opened, it ran for this level. So there you go. You can see our negatives. 0.5 was just actually met. This trade will possibly be held until the new week opening gap, or previous new week opening gap. That was last week actually. This gap was made last week, so that is a potential target. You can see the extension level of negative 1.5 actually confluence with, or you could say lines up with a potential high that I have marked off. Let's see, zoomed out. This blue line right here. Yeah, so it lines up perfectly with this potential high right here within the new week gap. And then we have the previous week's high PWH, which is previous week's high. And then we have more of a buy side liquidity above that. So those are potential targets. Mainly focusing on, because the market has been kind of crazy for a while. I think that has a lot to do with elections coming up as well next week. So yeah, we have that high right there, and we have this previous week's high right here, and then we have this regular buy side, the highest of the high right here. I think it will eventually want to reach for that, maybe just to end this week off going into the election, and then who knows from there. Next week definitely won't be trading, because I think the market's just going to be very unpredictable. It's going to be a lot of liquidity going on, a lot of movements going on. So I don't want to get caught up in any unnecessary trades. So just preserving capital. So I hope you guys found this video informative, insightful. This is episode 3 of Technical Trading Tuesdays. If you found this information valuable, please comment and subscribe to the channel if you're not already subscribed to the channel. And I hope you guys enjoy the rest of your day, evening, or night, whenever you decide to watch the video. I am out. Peace.